Yo, what's up, everybody? Hope y'all are doing well. Let me know if you guys can hear me okay, see everything okay. Got a good amount to talk about. FOMC type of stuff this week. We did have news at 5:15. You know, it is what it is. All right, Mike, so it's all good. Mike is absolutely crushing it, by the way. He's in my private group. Amazing. Crazy accomplishments in the last month. So kudos to you, brother, putting in the work. And you see the result. You know, what we do is not overly complex. Just takes a little bit of time to get used to the pieces and the puzzle comes together. Yeah, so you're saying you can hear me okay, right? Getting notifications. Yeah, okay, cool. Is it too loud or is it perfect or is it too loud, too low? And is the quality doing okay? Can you see the small letters? On these days, I try to get the low latency, the lowest possible latency. Sometimes, well, apparently it'll give the quality a hit, but hopefully that's not the case. But yeah, I'll take your word for it. But yeah, if you guys see any problems, if anything pops up and looks like a problem, just let me know. Because I can't tell. Right, I could tell on my end, but oops. Fix it, chat box. All right, so we have news at 7 o'clock. That's a split news event week or split news event day. So when there's the first news that comes out, you always want to consider that. Obviously, there's a lot of times a move that takes place, but when it's split like this, right, when it's cut in half like that, it could sometimes lead to a problem. Right, the first move may end up being fake. Let me see. What the heck is that? September data, I'm assuming. I'm not sure why it doesn't have a time. It would be two simultaneous releases. Oh. All right. Well, I guess they are splitting that up or having it simultaneously to make up for some of the data that they didn't talk about, I guess. But yeah, so again, we have news at 7. So we're still ahead of the open, so it's still pre-market open. If we look at what the indices have done, they're starting to tip a little bit to go lower. We did take up previous week's high. I did say on Sunday that I wanted to see if we could target this. It's the rest of the regular trading hours gap. We did tap back into it. I believe it comes down to here. Yeah, you see? We do have the failure swing up here, but we have broken down pretty significantly. It's not too significant, but we're respecting this. This is I believe it's a 1 hour, 1 hour bearish fair value gap. We got an intermediate term high here. Why is it an intermediate term high? Because it traded back into a fair value gap and it has a lower high to the left, lower high to the right. So getting up above that fully confirms that we will definitely slide into deeper buy-side liquidity. But at the moment, it looks like it's trying to really dump, maybe come and attack some of this trendline liquidity. I wouldn't be surprised if that is the case. We got a previous day's low here. You look down the bottom of the screen. You can see the sessions. We got London. We got the open price. We have New York AM lunch and PM session. So we could see that that is a previous day's low. We got another previous day's low here, right? Then we got another previous day's low. This has relatively equal lows. So that's also inside of a daily bullish order block. We could see there is a big wick here on the weekly chart. So is price going to want to come back into that, right? Like, or is it going to just basically close in a little bit more of this? Notice how the daily order block is what we're trading into at the moment. We could see that the daily chart, I think I'd like to have more showing on that daily chart. Oh wait, whoops, I have it on the left. So yeah, we see over here, take off some of the annotations. We have a wick in here. We have this larger wick. So if we wanted to, we could measure out that wick. We could get the 50% of that. This is all for targets going to the downside. So it looks like it's tipping over, at least for the moment. Did that drag over? No, it didn't. So if we take that, measure that out. So we have the 50% of the large wick in there that overtook this candle. 50% has been respected. You can see order flow has been up to this point respecting buy side delivery. So with that being the case, we want to definitely watch and monitor how that's going to behave, how it's going to react. I wouldn't be surprised though if they do come down and try to sweep this out. It is only Tuesday. Here's the high of the week. We got the low of the week so far. Friday's high and low, as I always say, is important when you're trading into Monday and the start of the week, because even if it's going to target some of these lower levels, it's going to have to break outside of that range, considering that it stayed inside Friday's range for the last like Sunday all the way to today at the moment. So again, we do have this 1 hour fair value gap that price is pretty solidly respecting the quadrants of. And we do got the trend line liquidity down there. So if we do dive, we're still in a bullish trend. We got a fractal high here. The next 1 to 2 candles can be bearish if we're bullish still, just to set up a further run higher. Unless, of course, we start to break 3 PD arrays to the downside, or just like break below this, right? Drop down, create another order block, and then take it out. That would fully confirm that price is most likely not going to want to continue, and it may just stall out. I did say that it's not really much of a high likelihood that we're going to create all-time highs. I mean, we obviously can. It's the end of the year though. It's capping the yearly range. We are literally a week before the rollover. So we got that the first quarter of next year starts on the 15th. Sometimes it rolls over the contracts up to the 18th. But you want to identify the 15th of every month, basically midway through each month, especially when there's like a quarter change, right? December starts the first quarter of the next year, right? December 15th. And then all the months that have the quarter rollovers like March and September, right? They also have the same characteristic where you also want to pay attention to that. So the week before, week of, week after is low probability because money is changing hands, right? It's changing contracts. So yeah, with that being the case, again, we lowered our risk to start the week, and we're going to continue to keep our risk lowered. We have FOMC this week too, after we just had NFP. So the slamming news events, which is a good thing for us. We like volatility, but we like good volatility. And sometimes these news events, these weeks that have these news events can have good volatility, but the risk is elevated because of manual intervention. They can do whatever the hell they want. They could literally tank price all the way down to here, or they can create all-time highs, or they could be stuck, right? Because it's been bullish, we're going to favor trying to be bullish. Okay, and anything that declines is just looked at as setting up further buy-side runs. All right. We're not even at the open yet. We're outside of a macro. The first macro did print, but again, it's the unreliable macro. So you'd prefer to watch the one that comes after that at 650, basically in about 40 minutes. Just wanted to take some time again. For those that may be new to the channel, I know a lot of people talk. A lot of people say this and say that, but Mike is doing amazing. He passed, I believe, one other funded account, and he passed this one too, right? And he's got his first withdrawal, $2,500. Like I showed you guys, Mike's in the chat right now, so tell me if I'm lying about the stuff that we do basically being unmatched. But it is, and every day it becomes even more obvious that what we do here in the realm of ICT concepts, obviously, but how we use them and the certain components that we use that create the WMG trading system is literally unrivaled, right? So anyone that's new here, trust is a hard thing to build, and I'm not telling you to believe me right away because of my, me saying it or me just, showing what I'm doing. Go in and watch what I'm doing. Like ICT says, go in and study what it is that's being talked about. Reach out to some of these traders that you see that I'm trying to pump up, because I'm sure, maybe they'll answer, maybe they won't. I'm sure they will. But I'm sure they'd be very open with their experience here. If you're on the fence, there's ways to stop being on the fence, and people are, there's a lot of scumbags in this industry, but this group of traders is not one of them. Okay. So yeah, shout out Mike, doing some amazing things. And if we go to here too, right, we got lots of traders doing very, very well. And it just goes on and on and on, right? So yeah, with that out the way, again, we're focused on trying to see what price is going to do here. We did take out Friday's low, and we are kind of gravitating to the downside at the moment. Things are definitely retracing. Took out previous week's high here with this, and we came all the way back. We hit an order block. So in a bullish trend, when price hits an opposing PD array, that's when you think counter trend or speed bump or reversal potentially. Short term, maybe long term, depending on what happens after it turns. But for the most part, if you're bullish and nothing's changed like right now, you're just looking at this as a potential retracement, right? Previous week's high, previous day's highs, those are all higher time frame opposing PD arrays to like a bullish trend. And then, of course, going to the downside, it'd be bullish PD arrays that price trades into that could then trigger in the potential for a reversal, right? So this is how you can frame out counter trend trades. And there's some traders that they don't like to trade with the trend because they are scared of it retracing. Hopefully this simple idea that I've just mentioned helps you understand that you don't have to fear that. You could trade with the trend, but pay attention to the higher time frame PD arrays. And if there's one that it's clearly reaching for and price is running and maybe you missed something, just think about your model and try to get in with a continuation of your model. Basically seeing the rules of your model unfold as price is printing a price range or like a price leg, right? So yeah, hopefully that's helpful to you guys. I know that there's a lot of people that don't know how to get back in, but it could be as simple as what I just said, right? You just got to get comfortable with that and submit to the fact that that is reality, right? And if you go in and look at what I've just mentioned, it'll quickly become apparent that this is what it is, right? So yeah, I think power of 3 too for every hour. Every hour has a hourly candle. Every hour has a power of 3. Every 15-minute candle has a power of 3, right? It's just on a smaller scale. Everything can be scaled or shrunk, right, onto the lower time frames inside every candle. It's another massive gem for those that are diligent. So yeah, looking at price, like I said, I would like to see, maybe it can get down a little bit deeper. We do have this 8-hour order block for value or 50% level. You could see the quick response off of that. And then, like I said, we have previous day's low, previous week's lows all the way down here. I don't necessarily think it'll get down there. Maybe it does. I'd really prefer to see us, try to get up here. But, we're not going to force our will on the market. If it shows us that it doesn't want to do that, say it displaces through this low and comes back and respects it, then, we'll have to just wait and see how deep it wants to go. But I wouldn't be overwhelmingly shocked if it was to decline somewhat aggressively. Maybe come down and take this out. It's been really bullish lately. So we're due for some type of retracement. And it's the end of the year. So I don't really, again, I don't have too much like expectation that it's going to create all-time highs again. It may wait, right? It may save it. We are also going into a new quarter, and power 3 happens on every 3-month candle as well. Yeah, if we do end up displacing lower, we can go as far as this. Preferably we don't see that if we're going to be bullish. But, it's definitely a possibility. And then, of course, if we displace through this aggressively, come back and respect it, this right here turns to an intermediate term high, right? Or this is already somewhat of an intermediate term high. So if it leaves this intact and we break down below here, as you drop down to lower time frames, or if you went to like the 5-minute, this, you could consider this as a potential longer term high if we do displace and get down below this. For now, though, this is an intermediate term high. And if we get up above that, it pushes you back in line with the bullishness, because intermediate term highs should not be taken out if it's going to be bearish or bullish, right? The bullish scenario is intermediate term lows shouldn't get taken out. The bearish scenario is intermediate term highs shouldn't be taken out. And if they do get taken out, if you remember from the 2022 content that ICT taught, that is a way to solidify a narrative. If you can identify the highs properly and the lows, like the way he teaches it, it's just another one of those things that builds trust and clarity as far as where price is going and why you can trust it. Okay? But for now, right, unless we get displacement, right, and things getting inverted and DXY trying to decline a little bit, we're going to have to keep looking to see how deep it's going to go to the downside. We did talk about DXY potentially coming back up into here and then declining. We do have this monthly fair value gap that it's creating a pretty solid response off of. So we got to keep that in mind as well. We do have a monthly bullish order block here too. So, there's some early signals that price may look to continue and try to go higher, but we're coming off this quarterly fair value gap rejection. I'm not too sure what that volume is. It's a weekly volume imbalance. Oh yeah, right there. All right, yeah, that makes sense. So So yeah, if this monthly fair value gap holds and we displace and we break above the candle here, right, the potential breaker candle, again, that would set us up with the ability to try to get up into here a little bit deeper. We're at a moment in price though where it's going to have to make a choice. Are we going to smash through and invert this, right, the monthly fair value gap? That would be beautiful for us to then look to see it as a resistance level and continue to favor shorts in the DXY. But now it's responding off of this. So we got to see, we're trapped between this weekly bearish order block, this weekly bearish breaker, and this monthly bullish fair value gap. So it's kind of, you could see how it's kind of stuck in the middle of those things. So, you got to be cautious. For now though, looks like DXY is still raging. We do have a bullish breaker here. So we definitely want to look at that. If this continues, it's going to keep going higher, and then we may, on the lower time frame, seek something like this. It's inefficient. And that would then, of course, continue to push the indices lower, currencies lower, at least to try to target things like the previous day's lows here. And if it was ever to kick back in line, say DXY ends up tanking and gets below here, then we'll get back in line with the bullishness. But for now, we created a fractal high at the highs. The next 1 to 2 candles can be reasonably looked at as continued moves to the downside in this case, until we hit a PD array that it decides to hold from. It seems that this 8-hour bullish order block here is not necessarily being too reactive. And we took Friday's low, and then we failed to really get up into these levels. It is only Tuesday, but this is pretty aggressive in here, so there's no need to try to force a buy. So we'll take what price is giving us at the moment. And we have this here too. This is a bearish breaker. We got low, high, lower, low. Failed to get up above it. So breaker's still valid. And we peak below this. So if we break down below this, we could use that as a pretty solid resistance level. And then we can also take this low to that high and classify that as a balanced price range. This whole upper portion is a balanced price range if we stay below this. That'll be a contextual idea with bullish DXY to be flexible with our overall narrative. Basically, make the bias instead of the narrative look to target sell side inside of the remaining bullish overall narrative. Narrative and bias are different. For me, I classify them as two separate things. Bias can be bullish or bearish in a bullish trend, right? Same thing with sell side, right? If it's going to the downside because of retracements, because of consolidations, because of those higher time frame moves being set up and originating from those lower time frames or beginning on those lower time frames. But I just classifying it that way, separate, has allowed me to be flexible when I was really just getting started. Because then I got to keep the overall narrative from the higher time frame, but then still be able to make sense of something going against it on the lower time frame, just to simply set up that higher time frame move. And sometimes, like in the DXY, you gotta kind of wait a little bit because it's a little bit iffy, right? It could hit this and decline aggressively. It can, rally through it and then use this down candle here as an inverted breaker, and then look to go higher. Those are possibilities. Both of those scenarios, they could be plausible. At the same time, this has been really bullish on the weekly chart, so maybe you wanted to stick to that and see this as a retracement, maybe just a stop run, and then go against that if it does respond here and then breaks down. You may get things wrong in that type of scenario. You may take a loss in that type of scenario, and you just got to be ready for that, because in that case, you're basically paying, the loss is basically paying for you to get the right intel, the right information, and sometimes it's required to do that. No one's perfect. ICT has like 34 years now of doing this stuff like this. So obviously his intuition is a little bit deeper than most. But as you guys have seen on this channel, we could be correct enough, and we don't really get things wrong, and even if we do start the day and something does not go the way that we intended it to go, we have ways to be flexible, and part of that has to do with this type of tactic, you know, and then you start to build intuition, you know. So yeah, hopefully that makes sense, and we're going to see if this is going to continue unless it displaces through. We got this wick here, so let's see if this wick here can hold price, and then see if it can't get us to decline a bit further. So yeah, if it stays below that, that's a good thing. Make sure I got all the right stuff. But yeah, again, appreciate you guys hopping on. Appreciate y'all liking the video and subscribing to the channel. It definitely helps us out. It helps me reach more people. And I'm trying to get everybody to, you know, be like Mike, be like Harley, be like Byron in the private group, and a handful of others, right? It's very life-changing stuff, what we do here and what ICT has blessed everybody with. So yeah. So again, we got the open here. So we're on the 15-minute. We do got the low down there. Could potentially be high resistance getting through this again because it's basically already took the low. So work's been done. But we technically still got equal lows here. Take this low, drag it over. So there's still liquidity in there. So if we drop down to the 1 minute, if we were to trust the fact that this is going to hold, then that would end up being the target down there. This low, maybe even get down to the previous day's low. There's nothing in here for me to want to execute. None of my models are in play yet. DXY is definitely unloading, so it's pretty interesting. There's a pretty wild cracking correlation here, as you could see. Nasdaq's dropping, the Dow's going higher, S&P's kind of stuck. So I'm going to wait till the macro. We also have news coming very soon. Again, it looks like it's going to take this low out. Right, because we're so close to that, I'd actually prefer to see that first, even if it turns to go bullish. For now, though, there's nothing telling us bullishness. You know, that'll potentially change if we can end up getting above this gap in here and start to invert levels. Otherwise, it's going to keep going, targeting the lows that I mentioned. And again, this is the daily order block here. So we got to see how that responds. It's accumulated in that level a lot. Buy side or drop down to rally, drop down to rally, drop down to rally. This is a visual representation of accumulation. Accumulation of what? Buys inside of the bullish daily order block. Right? And if it does tank and it gets down to here, then this was accumulations of shorts, right? As they ran up into the regular trading hours gap. But overall, again, nothing's really changed to get us away from buys on that higher time frame. So we're going to keep the focus there until proven otherwise. So yeah, we got an order block here. If this order block prints and then it quickly breaks down below it, that'll be pretty significant to see if price can get down below here and then invalidate this. We're 100% confident it's going to get down below this low if it closes below the 50% of this order block. The S&P and the Nasdaq are definitely contesting the downside. But yeah, so now the previous day's low has been taken. Right, like I said, was likely to be the case. Again, I'm not worried about missing anything. We have a wick down here too, right, that could be looked at. This wick right here. So yeah, all of those can be targets, along with the previous day's lows that I just mentioned. The for the last, what, 10 days? Something like that. So yeah, we'll see how this behaves in here. Yeah, we still got a little bit of that range from this previous week. Right, it still has a little bit more that it can try to dig into. If we go to the weekly chart, go to the weekly chart, we could see it's pulling back. We're still inside this new week opening gap, right? So yeah, that right there was regular trading hours gap too. It's really tiny. Well, not tiny, but it's, you know, relatively smaller than, or it's like this one down here, right? Or over here. So we'll see what happens in here. Again, this is another area in price that we can observe to see, okay, is price going to get above that? If it stays below it, and it stays below the first presented fair value gap, and it stays below the 50% of the overnight equilibrium, basically the range from London to New York, like the high and the low, if we stay below that, if we stay below the first 30 minutes of last night's range, or last night's open price, right? Like if we come over here, find the 9 o'clock time. So this to this. Oops. What the hell is it? Oh, there it is. So yeah, this little range in here mixed with the first presented fair value gap, mixed with the overnight equilibrium. So basically this high up here down to the low, 50% of that. If we can get above that, if we can get above this fair value gap that I highlighted, which is from, I think, was it the 15 minute? Yeah, 15 minute. The 1 hour. If we can get above that, all of those things would indicate that we're going to go higher, right? Especially because we have higher time frame bullishness. In the face of this decline, these are the things that would kick us back in line with a trustworthy buy, because it's shorting and most people aren't going to be comfortable, right? So, well, some people will be, like Byron. Byron likes to take the counter trend moves. But for those that have a hard time trusting when price is going against you, going against your narrative, and you want to trade with the trend, this simple list of things that I just gave you, if price gets above those levels, it's going to be continuing bullish most likely, more often than not. If it stays below it, it's more often than not going to continue to decline, right? So those are real-time indications, aside from the order flow ideas that I shared like a week or two ago. And for those of you in my private group, you definitely know what I'm talking about. But this is just another one of those checklists that you can use to help gauge whether something's going to continue or not. So yeah, if we take this, we zoom up, get up a little bit with it, make it a little bit bigger. You know, it seems like we're still potentially going to trust buys. You know, if we shift above this, that'll be a nice change in state, and I'd really like that, honestly. So yeah, it's a beautiful change in state there. I think I like that. So let's see how this unfolds. I'm really paying close attention to this order block here. We want to see that. Yeah, we want to see that order block. Pretty beautiful run right there. So yeah, now we got a breaker. See if we can't get that to continue. We're now above the 50% of the regular trading hours gap. Beautiful run. Those of you in my private group, you know what I just pointed out. That was definitely an opportunity in there. For the razor model. See if we can get a follow through. And we got the breaker in there too, so whichever, idea you resonate with. So yeah, that change in state was really nice in there. DXY is a mess, so got to be a little cautious, right? Oof. Oh yeah, the news, huh? The news is coming. Uh-oh. So yeah, that would have been, that was a stop out right there. Just came back and stopped me out. How many points was that stop? Sheesh, what a whip, huh? Execution was there. Stop was below that candle, or right before that candle's close, or the low. I could pull that up and show you guys. The stop out there, see? Yeah, I'm still pretty confident that this is going to continue. So we'll see what happens here. We do got a shift in here, so we do want to pay attention to this. The only way that I personally would get back in line with this, given the structure is still pretty, pretty relevant and still valid, we have to get above this fair value gap in here, at least this one, and then invert that, and then that would be my potential secondary chance. Otherwise, if this just tanks, again, we still have the lows down here, and then we could potentially try to position that, position in line with that and try to see if we can get that. So yeah, see, you don't win everything, right? Like sometimes things like this will take place, but you don't let that shake you, right? Because everything is still in line with the overall intention. Maybe my stop was a little bit too tight. It's a little bit too close to the open for my liking. It looked really nice. We're still inside this breaker here, so I still believe that we should be able to get a continued potential move. So let's see what happens here with this fair value gap. See if it can hold that upper portion of the fair value gap. I need to get a little more than that. A little bit more than that would be a nice confidence booster. We do got this breaker here, so again, it's kind of like the crux of the situation here. And again, if this invalidates it, right, and it breaks down below that, then of course that's going to invert, and it'll start to build interest to try to go the other way. But we'll see what happens in here. We got the Dow running. The DXY is just absolutely a mess. So let's see what happens. So yeah, we're getting close to a macro now. So that is generally a good idea, right? To get as close to the macro as you can. Got like 60 points to the low. So yeah, let's see what happens. So this is generally what you want. You want to see it run stops, give a nice shift, and then see if it can set up like a breaker and whatnot. This breaker, high to low, 50% of that is, it should be a balanced price range above that. So let's see if we can get above this. That'd be very nice. We still got a little bit of the gap to go. DXY is just very unwilling to do anything clean at the moment. So it's going to present us with problems, you know, in terms of clean price delivery, because that's kind of just the way it goes. You know what I mean? So not a week to over leverage, not a week to do anything stupid. Okay. So yeah, now we took out this low, still inside the breaker. Let's move up and see how big that candle is. Okay, yeah. So yeah, there's that response off that breaker still. So again, the whole idea is not invalidated yet unless this breaker gets taken out. Yeah, we have the 50% of that wick in there. It's like, what is it, a 1 hour, 15 minute? 1 hour. So if it's going to be bullish, and this is going to in fact be a sweep, we're going to have to see price respond pretty aggressively through this. Right? We wouldn't want to see this hold too aggressively. So yeah, and then we can kind of just see what price wants to do here. If it gets up above here, that's even more, it's definitely confidence boosting to take out the trend line up here, trend line liquidity. And we got London's high up here too, right? So London low was taken out here. Previous day's low was taken out here. So yeah, we'll see what happens. This could very easily just be a retracement to target these lows down here, like I said. So I'm not interested in getting back in just yet. I need to see a little bit more evidence to be able to trust that breaker, because DXY is just kind of nasty, and there's news coming in a very short amount of time. So yeah, let's see what happens. So I'm going to wait till the news comes out to make another decision. Still holding that breaker. It's having a hard time getting through it. But I think this is all just kind of in a holding pattern for the news coming soon. It's a jobs report. 1, 2, 3 drives. So let's see what happens with this. This right here may end up being a breaker if it does break down below this low. So we're definitely got to watch that. If it inverts that, that's beautiful for us to then try to get us up above there. And if you find your model in there, that'd be beautiful, right? But for the moment, it's very sideways and it's approaching the news. So you don't want to go too hard when there's a news event coming, especially on a week like this, in a month like this. You want to wait till price comes to you. You don't want to force price to do anything, because it's more often than not going. It's more often than not going to do what you want if you're trying to force things. So you got to wait, right? Let things invert. Let stops be taken. Let it displace. Let it form your model. And then try to do something, right, at the right time inside of a macro. So on and so forth. It's perfect, bro. You know what time it is. Freaking Mike. Talking about the razor thing I talked about earlier. Small little jolt right there. I think that offered, how many points did it offer? Oh, it offered 20 to 30 points. See, if I would have been satisfied with that, the 20 to 30 points that I talk about, it wouldn't have been able to come back on me. But hey, sometimes it is what it is. Now we got that inverted fair value gap there, so that's nice. Not too sure about the follow through. We're stuck in a holding pattern, so very highly risky because it's also right next to a news event. So yeah, you see the delivery ahead of the news. So this is not telling you, oh, I got to get in. Like, you got to wait for the news, because it's basically stuck. Still respecting that breaker, but it's basically stuck. Yeah, the news can easily come out, wick below, and then look to go. It's still respecting this fair value gap here, so we're stuck in between two ideas. This being a YouTube model short, and the breaker here looking to keep going higher with the higher time frame bullishness. The start of this week has already pretty much declined. It's the start of the month has basically declined too. So we're getting pretty close to the middle portion of the month. So you got to think accumulation, manipulation, then distribution in the middle two parts of the week. And we've already pretty much dropped pretty significantly below the open price for the month. And the higher time frame narrative is still bullish, right? So we need a demand. The price shows us that it doesn't want to do a buy side delivery by basically seeing levels get invalidated. We're inside this fair value gap here, so we'll see what happens. If it stays above that, it could be a good thing for it to go higher. But if it breaks down and takes out this low, our intention will be to target that previous day's low I mentioned earlier. Which is right there. So yeah, let's see what happens when if we get below this low, because this then becomes a mitigation block here. Got a high-low failure swing, right? And then we would have to see how this candle behaves. For now, you also have this here, a low, high that takes the high, lower low. So you have a mitigation block and a breaker on this time frame, basically in a very similar place. Low, high, lower low, high, low, failure swing. So this candle here and this candle here, right? That whole little range in there, if it's going to be bearish, needs to be sensitive. So we will see what it wants to do there. So we're waiting for the news. You know, it may take off before the news, but you know, with this type of week, with these types of news events, do you really want to risk it? You're gambling because you don't know if it's going to wick you out, right? You don't know if it's going to, you know, be sporadic, you know, and do some craziness. And you could still be right, you know, but is it really worth the risk when you can just wait? So yeah, let's see what happens here. Very much in a consolidated holding pattern. See that the 6 o'clock time was here. If you take the whole hour's range, it's an indecision candle. You could see that here. This was the current hour's range, right? It's just been sideways. So we do got a stop run here. We got a wick. Still got the breaker, bullish from this high, low, higher high. So it's still being respected overall, right? And then, of course, these smaller pieces of price action, you could see that there's things that may justify going lower if it does break down below this low. All right, this is also a fair value gap in there. It's on that 1 hour. So it's at the low of it. We already got Friday's low taken out. So if this does end up going higher, which, right, we're going to have to wait for a little bit more indication that it's willing to do that because it's sideways, you know. But if it does end up going higher, again, we'll target these up here. We would really like to see it get up above this fair value gap. It's really rejecting that. It's not necessarily the best indication that it is going to go higher. But again, we're going to have to just wait for the news because that news could just shoot it up and disrespect all of it. But typically when price does this at a PD array, it generally likes to hold it, right? Because it's showing an unwillingness to really get through it. The wicks are, but the bodies, look at the bodies. So that is something that is in line with the argument that price could potentially look to target these previous day's lows, right? We got this wick in here too. It's going to be significant to watch how that reacts. Because if we get displacement after we've left the wicks open like that, that's a good signal for bullish order flow. And again, we still got our targets up here on that higher time frame. So we definitely want to monitor this. Got that order block. Got a 5 minute? I don't. Okay. So yeah, like I said, the breaker still holding in price right now. Okay, it's still holding. You see that? 50% of its holding, so that's still bullish. Still supportive of bullish price delivery. And we now, again, we're getting that delivery from the order block there. So that's pretty nice. Like if this didn't have a news event coming at 7 o'clock, that could be crazy. This is something I would have executed on right in there as it started to really get through that again. But considering that news event's coming out and the first move got taken out. Now, okay, now the news is coming out. Let's see the response. Damn, look at DXY. Holy crap. DXY just exploded. Of course, if we come to this time, look at it. See? This news event is reckless at times. You see the delayed response? Something is going to unfold here. It's not going to not react. Correlation is an issue. Everything's going higher. So the bullish overall objective has been true. It's just been a pretty chaotic relationship that the overall DXY and the other indices had. I think the currencies too, what are they doing? Yeah, the currencies are submitting to the strong dollar. So let's see what happens. If this ends up breaking down below this low, that's when I'll look to try to target the previous day's low. I mean, if this just continues, I wouldn't be surprised if it does do that. So far, though, there's nothing telling you to take a short, you know? It's just all buys that haven't really moved, right? They haven't really done much. The S&P looks like it was a little bit nicer. Yeah, the S&P had a better move. Let's go look and see. I guess it was a slight SMT there, huh? With the Nasdaq making, yeah, there was for sure an SMT. Nasdaq made lower lows, so it's the slower mover. If these assets go higher, the Dow was, it seems as though it was the strongest. Yeah, the Dow was the strongest move higher. S&P coming in second, and of course the Nasdaq is the one that chose to move slow. So yeah, let's see what's going to unfold here. Right, like I said, if there was no news event, that this would have been a position I would have taken on. But I don't like how it looks. If DXY is going to keep doing this, they could tank the indices once more. But the higher time frame bullishness is obviously, that's been the main objective, you know. And if price wasn't going to support this breaker, we would have looked to target the previous day's low. You see the 8-hour 50% of the order block. It's definitely holding. Like I said, we got above these levels now, so now my objective is up here. And this breaker that I painted out, maybe, I mean, looking at this, obviously, I guess I put my stop a little too close, 21 points instead of like 30, 35. Given the volatility, 35 would have put me below this low. Clearly, that would have been a safe bet. I didn't adjust my risk on my contracts for that, so I didn't allow myself the opportunity to do that, to have it a little bit bigger in the moment. But hey, it's kind of just the way it is at times, you know what I mean? You can't be perfect. You're going to take losses. We have this high to that low, by the way, so let's see if we can stay above the 50% of that. This high to that low. 50% is here. So as long as this low stays intact, it'll continue to race to the buy side. So yeah, on that 5-minute chart, we have an order block. We're also above the fair value gap that I talked about there. Right, this, I think 1 hour or 30-minute fair value gap. See if it can't stay above that. Got the 8-hour bullish order block here too. So now it's reclaiming that. DXY is rallying aggressively. So again, that may have an issue with this. It's giving this a problem. The Nasdaq itself is the one that made the lower low out of the three. So if it is bullish, the Nasdaq is going to be the more difficult opportunity to trade because it's going to slowly or more slowly get to the level it's trying to reach for. If they do end up continuing to go higher, it may still get there. But again, you're going to have to sit through a lot of what we've already been seeing right now. Holding pattern, displacement, holding pattern, not much follow through. But yeah, this here is now returning to an order block, this height of that low, this height of that low. It's also a breaker. This one's an order block. We got a fair value gap in there. Let's see how that's going to behave. If it inverts that, again, it's continuously validating that it's going to keep going. But if it starts breaking down and we lose this low here with a displacement, not just a wick, but a displacement, that may be cause for concern. And definitely if we take out this low to that high will turn into a bearish breaker. And then you could then seek to attack previous day's low. Right, like I said, DXY is rallying aggressively. There's a reason I'm not trying to take an execution here. I don't trust it, given how fast this is. It could still do it though, right? But I just won't be a part of it. See, we've got this low, that high. So yeah, I'm in a moment of not really interested in engaging. Let me just look at it. It's been pretty vicious. Unless you were trading the Dow or the S&P early on, which they offered beautiful moves. The Nasdaq, it came back, stopped the position out, the small position with 21 points right up in there. It offered 24 points up to the high here. I wasn't satisfied with that, right? So I didn't afford myself the 20 to 30 points, which, if I did, it'd be a different story, right? That sometimes is a deciding factor when you're scalping. When prices like this, taking 20 to 30 points and being content with that can decide whether you're going to be profitable or not. If you get comfortable with that, you may leave money on the table too, but we're not here to, get the biggest trade. We're here to be profitable and pay our bills. Same financial advice. I'm not a financial advisor. I don't encourage you to take the trades that I give. But if you do choose to do so of your own free will and your own decision, we're right more than we're wrong. You know what I mean? But sometimes it'll be like this, and you got to manage it. I could have easily went in there and took 4 more trades in there, right? Like I used to when I had the over trading issue and habit. But what would that have done? I would have been pissed off. And then if it did end up going higher, I would have been telling myself, damn, I should have waited. I refuse to have to tell myself that like ever again. And if I miss a trade by waiting, so be it. If I take a trade, make a loss, and then there's an opportunity that shows up, but I'm not really overwhelmingly confident in it because we're in something like this, and it runs without me, so be it. That's better than me feeling the pain of regret, and it's going to be the same for you. So yeah, remember what I said about this fair value gap in there? We're watching that. Let me go look at the chat. Yo, what's up, Fritz? Man, welcome. Appreciate y'all hopping on. Yeah, I know. ES literally exploded, huh? ES definitely had ES and the Dow definitely had more explosive moves. You could see that the S&P and the Dow, they've made, I guess, a deeper run to the buy side, while the Nasdaq has kind of made a failure to do so aggressively. So that, if we do see a short take place, we may see that the Nasdaq is the faster mover to the downside because it's got the lower low and it's failing to blow out the highs like the other 3 did, or the other 2. But yeah, this is just a nasty piece of price delivery in here for the Nasdaq. So again, I'm unwilling to really push too aggressively. I already took one. It resulted in a loss, right? We're transparent over here. It's not always wins, but most of the time it is, you know. So that's what we could rest assured in and not really be too concerned about, when a loss does take place, because it's guaranteed at some point, we'll be able to get it right. And like the high 80, 90% percentile, which I proved this year when I was trading a Top Step account. It's 86%. High was 91. Had a couple losses in between, but finished it off with 86%. And that's in the free Discord. You can go check the track record on that. And those of you in my private group, you're with me every day. So, you kind of know, the vibe. But hopefully you guys didn't get in here and hurt yourself, because, we still see this breaker holding in there. But you see what the rapid cracking correlation, but the rapid buy side delivery in the DXY does when we're trying to see the indices possibly go higher. You see what it does. This is what you have to encounter. So do you think it's better because you want to take a trade? Do you think it's better to take a trade because you might miss something but have to deal with this, or relax and not put yourself through that chaotic stress? Because a trade's going to come eventually, right? But we want the best of the best opportunities. And sometimes when it looks like this, it's not the best opportunity. And the likelihood of you not being able to hold it because it's taking too long, right? Or exiting early, or, letting price come back against you when it's not clearly being favorable, the likelihood of that is pretty high. We'll look at Silver Bullet opportunity. Are you talking about, what's that, Asia? Asia Silver Bullet? Oh, wait, no, that's the Eastern time. Yeah, that makes sense. A little PM action. We do got news later on as well. Definitely curious to see if this is going to allow for us to open up a bit. I'm not surprised that, we've had a bunch of little spurts of good price delivery, but then a mixture of a lot of nasty back and forth consolidation, lack of follow through type of delivery, because that's the time of year we're in. Holidays. I mean, every moment of every day there's geopolitical things happening, but more so the holidays. It provides cracking correlation from November to January. It encourages a lot of cracking correlation, a lot of holding patterns, lots of, looks like it's going to follow through, but then it doesn't, and it dies out. And then it does it again, but then it dies out again, and doesn't really run massive ranges. That's just a characteristic of this time of year. Right? So we have this fair value gap here. We got the first presented fair value gap down there. So let's watch this right here. See how this is going to treat this fair value gap. I mean, it's so wildly cracked in correlation here. Maybe we got to stop run there. See what DXY is doing. DXY is giving a little cap real quick. Yeah, I pointed this out at the start of the day. You can see that we got up there. The breaker. This is bearish. When you see DXY doing that type of stuff, that's bearish for the indices. So we'll see what happens in here. If we can get back down below this order block in here and it trades back up into it, maybe it displaces, gives us one little attempt to get back into that. If DXY keeps going, again, that'll start to make me feel the interest to potentially look to target previous day's low, assuming that DXY keeps up the buy side delivery. But at the moment, it's kind of a 50-50 shot right now. And if you took an execution, it's holding. Maybe it opens up soon. But this is very skewed. There's a lot of twists and turns when it comes to all of the correlation. Oh, the hell is that? But yeah, again, hopefully you guys haven't pushed too hard in this. But if you took like something in the Dow or the S&P, you probably had a better opportunity. You definitely had a better opportunity when it came to the buy. It's a breaker there, beautiful. Deep retracement showing high resistance. And the Nasdaq, I mean, just look at it. It's just nasty. You have to be able to tell yourself that there's nothing in here, okay? There's nothing in there to execute at the moment. Maybe there is in a little bit. At the moment, though, this is not something you want to be able to, or you don't want to engage that, basically. We got 1, 2, 3 drives pattern. Again, like I said, we're watching this fair value gap. If it would have got above and used it as support, that would have been a pretty strong driver that it would go higher. But clearly, it may not do that. See how it treats this low at the moment, right there. And again, we have the previous day's low down here that's really, really nice. It's building trendline liquidity here. DXY rapidly repricing higher. If we did get a displacement through that, would basically be supportive of this being taken and then this. But we'll see, right? It's definitely holding inside, basically trading this regular trading hours gap, back and forth, balancing out that inefficiency. And these lines here, these blue lines, that's a wick from the 1 hour. Take some of that off. You could see the 1 hour wick in here. Actually have an even larger one on that 2 hour. So yeah, definitely has done a lot of work to build up inside that low. Overall, right, the higher time frame still doesn't show that we're done being bullish. So far, the weekly candle is bearish, but it's only Tuesday. Tuesday, Wednesday sets the high or the low of the week. This right here was the low that was just set, if I'm not mistaken. Yep, it's the low that was just set. So it's Tuesday. So are we going to set the low there? If it breaks above this, let's see, 2 hour, 4 hour. Yeah, if we can get up above this candle here, displace, maybe even above that one, that would be a pretty solid change in state of delivery for me. And then we got this candle here. If we move up a little bit, we could see that too. We got an order block change in state. So a secondary move above this high or above this order block here would be a nice indication. If we can also see DXY decline. I don't like to buy things when DXY is bullish or sell things when DXY is bearish when it comes to the indices. Because market symmetry is very undervalued in this industry. I see a lot of people just sticking to just the indices or, just one asset that they're choosing to trade, and you're literally trading blind. You know what I mean? Why do that? Because of being lazy? Is that it? like I'm not sure what the cause is. Some people say it's overly complex, but constant losing streaks is overly complex, right? Not being able to achieve your goals is brutal because of I just want to click a button, right, and just use one asset. It's needless, so expect that to be a professional. There's other things that you got to learn, and things as simple as intermarket relationships, understanding them can absolutely change things, right? Along with everything else, right? But that's one of those key components. So let's toggle around real quick, kind of see what else is available. So yeah, we got that daily bullish order block there. It's beautifully respected. This 8-hour order block, right? Well, daily order block. Go to the 8-hour. There's also one there as well. But the daily bullish order block is definitely the key component in here. Price has accumulated in that area multiple times. And this is simply a retracement, it looks like. But again, in order for that to go higher in a trustworthy fashion, it doesn't need it to go higher. It could be cracked in correlation and continue and do whatever it wants, right? But the point is to build clarity, right? To build trust. How do you do that? You have to couple these different components together. It's like layers. You know, there's layers to trading clarity. And you want to definitely be a professional at the layers. So yeah, let's see. This response in here is beautiful. This is amazing. It's a beautiful, beautiful response from a predetermined level that we looked at to be in that volume imbalance or the liquidity void. That's what that is. It's a void of liquidity. There's not even a wick. So it's a liquidity void, right? So yeah, let's see what happens here. We're not inside of a macro, obviously. But we do have a PD array that formed in the macro. That's another way you want to use the macros. Find PD arrays that form in the macros, or if a fair value gap forms outside of the macro and you draw it out, it's best to wait to see how price will deliver inside the macro if it reaches that PD array. So say there's like a fair value gap over here that's not in a macro, and I drag it out, and then we get up above it inside of a macro, and then we trade into it. Now that PD array becomes more significant. Does that make sense? Let me know in the chat if that makes sense. Because that's a huge leap forward when using the macros. It's not your model. I mean, PD arrays that you're going to execute on, it's not required to always form inside the macro. Things can form outside the macro, but then when price trades into that macro, when it trades back into that PD array while we're in the macro, or sets up your model inside that, then it becomes really, really, really cool to watch. Very, very accurate. And again, if this is going to go lower, right? If we're going to trust it's going to go lower, we can't get beyond the 50% up here. You may be asking why. Why? Because this low to that high, right? It's a breaker, right? We got buy side taken, sell side taken. So this low to that high, that whole range, you drag it out, should act as a BPR. You see this high up here? You notice how it hit the mid portion and stayed below it? We may end up seeing that same thing happen in here. We're still below this, right? We need a good amount of evidence that's going to keep going higher against the rapid buy side delivery in the DXY. This is pretty telling though, right? And again, this hit the liquidity void right there, which again is a void of liquidity, right? There's no candles in there, not even a wick. So that's the liquidity void. It's not a volume imbalance. It's not a fair value gap. It's a type of gap, but it's very specific. People, a lot of people on the internet they define fair value gaps even when they see a gap like that has nothing in it. It's a liquidity void, a void of liquidity. Right? And you can see the beautiful response off of that. So yeah, if that keeps happening, if we keep getting this, if we take this low out, we're going to be back in line with downside DXY, and then we'll see the rapid repricing of the indices to the buy side, which again, that's been the undertone. There's been, possible chances that price will go bearish, but we've had to see things take place that would support that. This does not support that if we're closing above a wick like this. Definitely not. Or if we're closing above it. So yeah. And again, if this was to displace and get below this, I'll take this high to that low and the failure swing as a mitigation block. And then I'll also look at this low to that high as a bearish order block. And then those levels would be justified to hold price going lower. And then of course we got the balanced price range here. Right? We'd have to see this continue to hold as well. If we're going to be going to the downside. But for now, higher time frame wise, we're still bullish. This just simply looks like it's retracing. And look at the level that the lows are being formed at. They're responding aggressively away from the 50% of a higher time frame bullish order block, being the 8-hour order block 50%. Right? So yeah. Looks like it's still holding up. It's definitely been a messy run to the buy side in here. We're now above this, so we definitely want to watch that. If it can get back outside of the regular trading hours gap, that regular trading hours gap range in there, we could look to see that act as support. We also see the rally up turning into a decline in the DXY now. So yeah, didn't want to respect that. So that's pretty interesting. Very nasty price delivery. It's definitely not anything that I'm overwhelmingly interested in trying to engage. We do got trendline liquidity in here. Still got the breaker that's still being supported bullish. Right, but I would definitely like to see a little bit more, because I'm not choosing to go trade the S&P or the Dow. Which, you know, maybe a better idea, but I'm fully comfortable with just not taking a trade unless something shows up. That's just kind of the way it is. And today is definitely a day that I'm sure I'll get DMs saying, I blew my account. How can I stop over trading? How can I stop this? And how can I stop that? You know, so you just got to listen, right? You hear what I'm saying? I'm not concerned. You know, I have goals just like everyone, right? But that's not an excuse to break the rules and not be professional, right? It's just the way it is. And you may see someone on social media, they took a trade and they did this, they did that. Well, given what we are looking at and how we're managing our business, there's nothing there. Maybe some other business, some other entity is able to take a trade right now. I'm not necessarily interested, right? So that's great. Kudos to them. But yeah, at times it's not going to be ideal for you and your system, and you have to be okay with it. Nobody else's opinion matters. Carlos. Carlos, you never have to text me that. For the most part, you control it, right? Like, but yeah, I'm not talking about none of you guys in my private group, right? For the most part, not many of you guys on the YouTube channel either. It's just random people on the internet. They see what I'm doing. They watch the live stream review. They hear some of the opinion, you know, and they may be in a pretty bad situation for the most part. And they need to kind of reach out. And it's cool, you know, not here to criticize it, but when people are saying like, hey, this is a shitty condition, hey, this is something that you probably don't want to touch, and you go in and touch it, I mean, it's like, come on. Because no one can help that, you know? There's no ability for a mentor to go in and stop that from happening. Which is unfortunate, right? But it kind of just is what it is. Yeah, DXY is taking a dump, so we're back in line with the overall bullishness. So the overall buy position initially, if I wouldn't have had a 21 point stop and have my 35 point stop, that would have definitely been the good choice, and we would have got all the way up there. But sitting through this, I mean, it's just nasty. Just nasty. You know what I mean? You don't want to put yourself through unnecessary chaos. So let's see if we can get above this. I would definitely like to see us get up into this level up here. Yeah, nasty. Ugh. Just it's unwilling to do really much of anything. So yeah, we got the macro coming, so we'll see what it wants to offer closer to that. But this is nasty, nasty, nasty. How did that just lag so bad? Definitely seems as though it's building liquidity in here. It's kind of sus. But overall, structurally, it's still supporting things like this. DXY is tanking. So in a perfect world, what the hell's happening? These things that we're seeing in here, how price is delivering, it should ideally continue to the buy side, but we'll see. Has literally zero follow through today whatsoever. And we're kind of just stuck between this range in here, right? This high to that low. This is the regular trading hours gap from a while back. Well, it's from this day. But yeah, this is high resistance, guys. this is what it looks like. It's a much different type of condition versus something like, you know, something that goes quick like this, or even something like this. We went from somewhat low resistance to high resistance, slowly getting up. Still getting up there, but very slowly grinding. And correlation is all over the place. So again, I hope you guys have been responsible today. Because it's very much so a disgusting condition. Very much a scalper's market, but even a scalper, you're not really getting even enough follow through really for that to be too reliable. We did get a decent amount here. Offered 70 points. This one offered another 70 points. But is your model in there? Do you see your model? Right? Are you comfortable with sitting through this? You really think you were going to catch the exact moment when it ran? If you do look at the times that it ran, the 650 macro did offer a quick move. Anything outside the macro, though, has been absolutely relentless with the consolidation. Let me look at the chat. There's not really much going on. You guys got any questions? Did you guys take a trade today? Hopefully not. Or did you stay disciplined and stay out? You know, a big takeaway from calls like this is noting the characteristics of the delivery because it is high resistance. You want to know high resistance and low resistance, right? Like, what do they look like? That's a common question. Well, when you see things like this is high resistance. Deep retracements, lack of follow through, very jerky price delivery. Those are times in price where you got to really, really be cautious because you can be fooled. And if you take a loss and you don't like that you took a loss and it opens up like this, you may get fooled. Fooled into thinking that, okay, well, maybe I'm going to be right now. And then the whole entire session, especially in months like this, parts of the year like this, weeks that have NFP, FOMC, any of these type of news events, rate cuts, right? That's something that's coming later in the week. You know, those types of scenarios can really lead to issues. You know, so but you have to be able to identify when this stuff is happening and why. What causes these types of scenarios? High resistance or low resistance? You know, because there's a set amount of things that set amount of confirmation that can allow to identify what condition we're in. Like I said, this is very suspect down here. How they've kind of just built up liquidity. So we're getting closer to a macro, so we'll have to see. DXY is definitely coming back too. Look how nasty DXY has been. You see the result? See what's caused by DXY being nasty? You know, cracking correlation can be a real problem. That's why you got to cut your risk. You know, when there's a cracking correlation, you cannot be gunslinging thinking you're going to hit home runs. You might. There's always a possibility. Anyone can go to a casino and gamble and hit a jackpot, you know, at some point, but can you do it consistently? You got to have a method for that. You got to have experience for that. You have to understand what you're doing. And going in there just taking trades because you feel like taking trades, it's not what a professional does. And you have to be able to identify when it's a time to take a trade. Right now, for me, like I said, this initial move, because the stop was a little too small and it took me out, I'm not in a rush, especially when I saw this happening. And it's just continued. Opened up in a macro, right? If I would have had 35-point stop instead of a 21-point stop, you know, I probably would have been able to sit through this. But, you know, it's how the cookie crumbles sometimes, you know what I mean? And you cannot go back in. If you take a loss, you're emotionally charged right away, whether you want to believe it or not. So, and if you go in there and take another loss right away off the same idea, unless everything is still valid, you know, you could really shake yourself up. And then once you're shook off those two, say it's really early. Say you traded before a macro and then in the macro it delivers. The FOMO is going to kick in. And it's a constant tug of war that takes place. So you got to be mindful of this stuff. There's a move higher right now. See if it can give a follow through 742. Basically, we're very close to the macro we're waiting for. Sometimes it shows up early. That's why I say 5 minutes before the macro, you want to look at it. You want to pay attention to the macros even 5 minutes before them. So yeah, let's see what this delivers in here. We got an order block in here. Inversion fair value gap. Well, it's a reclaimed fair value gap. DXY is unwilling, it's unrelenting in its correlation issues this morning. So, you know, kind of just is what it is. It's making a mess, yo. We got relatively equal highs up here. Again, this is very suspect. I hate seeing things like this, especially if there's a cracking correlation like this. Like this, it just looks like intuition-wise. I mean, it doesn't. I don't really feel too good about that being left available, because that's clearly building or engineering liquidity. Because people's stops are down there, higher highs, higher lows, higher highs, higher lows, trend line, right? But yeah, we'll see what happens. See what happens. Yeah, we got trend line liquidity. If we zoom out, we got a lot of similar type of liquidity up there. So now we're above this. So that was a beautiful response. This up candle here, we got high, low, higher high. So we can actually take this, drag that out like that. Just took out liquidity, so that was nice. So let's see how this order block holds in here. Again, I really don't like how DXY is delivering right now. It does not afford us the trust that we like to have in our trade. But it looks like, structurally it's still holding up. So let's see how far that can go. Order block, breaker. Right, we got the up candle, down, swept the low, rallied up. So I'll be looking at this as a potential BPR, just overall. See if we can't get that to continue in that direction. Again, we're inside the macro, so let's see how it wants to deliver here. We did just hit this fair value gap. Was it a 1 hour? I think it was a 1 hour gap. Yeah, 1 hour gap. It's kind of just back inside of the one that was used earlier. Nasty whipsaw back. See how it behaves to this. We now got a stop run, buy side taken, sell side taken, or sell side offered, buy side offered. And we peaked above here with DXY going higher. So again, I don't like this. Intuition wise, I hate seeing this like this, especially when there's a cracking correlation with DXY. More often than not, it becomes a problem. And if it does continue, it comes down, sweeps up that a little bit, and then attempts to continue. Right, so yeah, that was very vicious. Let's see if my intuition was correct. Looks like it was. Mind you, this is all happening inside of a macro. You'll see some people online saying the macros don't exist, people in the ICT community. Well, how do you explain this then? How do you explain the slow movement going into the last 10 minutes, first 10 minutes of every hour, and then almost every single time there's volatility, rapid volatility? I mean, that alone proves that they do exist. So, everybody tries to make a name for themselves, I guess, in stupid ways. Let me see. All right, no questions. Let me see. French observing only. Yeah, so you didn't really miss nothing you didn't really miss anything if you didn't take a trade today, except having to sit through a bunch of nonsense. So we hit this gap up here. Remember, we still got previous day's low if it does want to get, excited and look to try to target downside. Previous day's low could potentially become a target. I'd say if we get back below the regular trading hours gap, that'll be enough for me to have more attention paid to previous day's low, or simply this low. It doesn't have to get down there. But this regular trading hours gap is going to play a big role in me continuing to trust that we're going to go higher. Yeah, you guys got any questions? It's been more of a slow session. It's kind of just the way it is at times. Yeah, watch this gap in here. If we can't get up to here, this would be my cutoff. If we break down below this candle here, that'll be enough for me to really solidify that we're probably going to dig a little deeper. Maybe even cause us to get down to here. But if we overtake this fair value gap, which it looks like it might do, if it overtakes that, we're going to have that inversion and it should act as support. Couple that with the regular trading hours gap and it should be pretty intense. See if it can't get a slight return to it. It may not, right? It may just completely start to smash. What are the other indices doing? Yeah, the Kraken correlation is real. So yeah, now there's a break above that. Got an order block right here. Got that inversion. So yeah, this should be able to send price maybe up to here. We got equal highs up there. So yeah, it needs to stay above the 50% of this. If it gets back down below it, again, this will probably fail to hold up and come to sweep some of this out. So I'm in a mode of observation, right? So let's observe this. It's been too nasty today for me to really be like, yeah, let's get in. You know, ideally, I'd like to see this work out and go higher. Stop run, shift in market structure, fair value gap. We also have a larger order block here if we move up a little bit in time frame. 2 minute, then we got the 3 minute if it gets even deeper above that high. And then we got the layers of buy side liquidity up here. And the equal highs up here that are, I didn't see that earlier. These are pretty nice up here. But yeah, we're gonna have to stay above the 50% here. We're inside the macro too, so yeah, it may work out as a result of that. We got sell side taken, buy side almost taken, but sell side, buy side has been offered up to this point. So this low to that high, as prices are rolling along, if it is going to be bullish, we're leaving behind balanced price delivery as it keeps moving. Right? So assuming that it is going to be bullish, that's what I'm internalizing all the time, or one of the things, utilizing BPRs. This has a regular trading hours gap that is being used for the root of the expansion, right? Potential expansion. Again, we're still in a nasty price delivery. It doesn't have to expand at all. There's just a possible likelihood when you get into a macro, if things are aligned and you have a logical area to target and you're aligned with the higher time frame draw, it becomes pretty likely that it will expand during those moments. But we'll see, right? We will see. So after this, right, after we watch this idea, regardless whether it breaks down or goes through the buy side here, that will be basically it for me. And so we'll put a ribbon on it after that. So let's see what we can get here. That was a nice expansion. That was pretty nice. That's exactly what we want to see when we're talking about the things that I just mentioned. This dropped lower to go higher. If you go to like the 1 second, you could see that that was a market maker buy model. Sloppy, but the idea is there. These lines up there is a fair value gap. Yeah, see, very nasty. Very nasty. See if that can't hold. Remember, this is an order block up here, this line here. We did just close in the fair value gap up there, so now we've offered buy side and sell side in that area that was inefficient, or that it reached up for again. So we do got the 50% down here. That is definitely a part of the line in the sand. So we got to see this continue to stair climb its way up if it's going to keep going. And again, we got these higher targets up here. If it does get excited to get up there. The way that we're seeing price deliver, though, it may end the day being very slow, lethargic. My expectation is not too high. But ideally, this is what I'd like to see. Right? And then if we break down below this lower green line right here, we'll look to blow out the rest of this. And I think it'll stay inside the range. I don't even think unless PM session opens up aggressively, and then maybe comes down to here. If we get down into these levels, we're in consolidation, first of all. And second of all, it's just been a chaotic mess. And correlation's a mess, so low probability. No reason to try to, force your will in the market. I know I won't be. Just a little bit too bright, huh? It's like a bright-ass lime. But yeah, unless it takes this out, I'm going to keep going higher. Higher time frame, still bullish. It's just, again, nasty price delivery. So do not overtrade. I pray to God that none of you guys overtraded today. Because it's just unneeded, unnecessary. If you guys had a smashing week the last couple of weeks, or took a payout, or are getting close to a payout, you need to take a break. You got to manage those highs, because at some point something like this will happen, and because you're like, oh, I'm so close, I'm right there, you'll end up making the mistake of overtrading, and then look back on it and be like, damn, I should have just not did anything. I know that most of us go through that. It's needless. So yeah, we got a very lethargic price delivery in here. I do, at this moment, given what we see, I am still favoring us potentially getting up here. Again, the line in the sand for that is right here, especially if we get below the fair value gap. If we break down below this, my attention goes to all the trend line liquidity down here. We do have this bullish breaker that has been extremely sensitive, supporting price have been accumulating in that area, accumulation. And then you could see the, small little ripples that have been going to the buy side. We took out this fair value gap here. We do got these relative equal highs up here. Very logical, like low hanging fruit. Maybe beyond that, we can get up into this level too, but we'll see. All right, so given how slow it is, again, I do want to see that potentially take place. So continue to monitor that. But with that being said, hopefully you guys learned some stuff, right? Not every day is a barn burner day. Most of the time, we have a good time doing things. Today was, there was opportunities there. I took an early stop out, refused to get back in because of the condition. Even this, I'm just not not interested. And I'm just going to save the gunpowder for tomorrow and the rest of the week. All right. And then, we'll be live every single day, obviously, in my private group. For those of you on YouTube, appreciate you guys hopping on. Appreciate the support. Don't forget to like the video, subscribe to the channel if you haven't already. And yeah, we keep it transparent here. Not every day, again, is a barn burner. Some days you'll lose, or some days we will lose. Some days we will win. Most of the time things are correct. Today, the narrative has been correct to go higher. The trigger points to send price to the downside have not been solidified all throughout the morning. So as a result, we've been trying to see if price could go higher. It's been sideways, so there has been a slight likelihood that things may be unorthodox and kind of not do much. But overall, it's gravitated to the buy side. The overall intention to target the buy side was correct. So narrative was correct. And yeah, the validation points that would have triggered us to go lower never got really fulfilled. So as a result, we kept pushing price to the buy side. And you could see, right? This did pretty much what I said it was going to do, overlapping the fair value gap, balanced price range, came back down, and then we've just been like a rocket since. A small rocket, right? Little baby rocket. So we'll see if we can get up here, right? So keep that in mind. Again, thank you guys for the support. Those of you in my private group, I'll see you guys tomorrow. And those of you here on YouTube, you beautiful people, I will see you on Sunday this upcoming weekend. Starting next year, I'm considering adding maybe another, potential live call. So, we'll see. We'll see if I could work that out. But yeah. So with that being said, God bless you guys, and I will see you guys here on YouTube on Sunday. And those of you in my private group, I'll see you tomorrow. All right, take care, guys.